Today is Tuesday, May the 26th. So this is a shortened trading week. There was no trading yesterday. We saw this huge pop at the open for the Dow, the Nasdaq, and the S&P 500. And only really the Nasdaq suffered, and it pulled back from its open to finish not very high above the close with exceptionally high volume. So Microsoft, Apple, Facebook, Amazon, all losers today. Google was a winner. Verizon, AT&T. Advancers and decliners about 3-1. There's a lot to be seen in the charts, and the Chiku span and the moving averages, as you would imagine, are interesting. So let's just take a look at our charts, and let's take a look at the SPX. We'll also take a look at the NASDAQ 100 as opposed to the NASDAQ composite, just the NASDAQ 100. The SPX, look where it had its rejection, right at the top of this gap. We had rejection at the bottom of the gap for 2 days, and then we had support on the 200 on Friday. We took that jump and we hit the top of the gap. The top of the gap also is where the Chiku span hit the top of the cloud right up here. So that was a double or coincidental event, and was bound to have sellers looking to take short-term advantage of a pullback at the top of the gap. That also meant the Chiku span not being able to traverse through the cloud. So that's significant. Let's take a look at the NASDAQ 100. The NASDAQ 100 had this gap back from February, just before COVID, third day into COVID, and it filled it, but was not really able to break out. It had 1 day above the gap, then it fell below, fell to the median line, popped up today, and was sucked back in. You'd have to read and find out if there was some technical or some fundamental reason that they pulled back, but from a charts point of view, it looks like the gap is still in play. If we bring in the cloud really doesn't tell us all that much on the daily basis, and on the weekly basis either. Apple had a great day today, and it lost everything that it had from the open. But what happened technically? We can get rid of this bat pattern because it's filled, but another pattern came into play, and that's this one right here. If you remember when we had, let's see if we can't, let's look at on a monthly basis. Well, that's pretty tough to see here, but we've got this, we looked at this ABCD pattern before, and I won't go back in history on it, but when it reached this top right here, it pulled back to 38.2% of that really, really long wave. I mean, looking back to 2002, we had Apple was just on a killer tear up and then pulled back exactly 38.2%. And if we take a Fibonacci of this down wave, a 100% retrace would take it back to 232, and a 200% retrace would take it back to 323, which it has now hit twice. So there was 2 reasons it pulled back. This you could say is a double top. The highest that we've ever closed in Apple, if we do the green line thing right here, that's the highest close. Let me move it up a bit. Oh, sorry, that's the Fibonacci lines. I'm sorry. Anyways, the highest close was right here, and that's pretty much where the wick on this candle was. So Apple will go higher, but it's going to have to work off some selling orders first because it's just rebounded from the COVID dip very, very rapidly. Caterpillar. Caterpillar is interesting because Caterpillar was stopped today when the Chiku span hit the combination of the 250s that were very, very close together. As soon as it hit that, it pulled back. The volume on Caterpillar was reasonable. but it was a pullback just due to technical, with the traders sitting on the Chiku span, hitting the 50 and deciding to do some short-term profit taking there. But otherwise, it was a pretty good day for Caterpillar. Home Depot had a good day initially, but it equally pulled back, ended up just up 0.5%. And the reason it pulled back is because it made a double top. So it had hit the pre-COVID top of 247.36 and a little bit more, and then it just pulled back. So we're seeing, we can get rid of this pattern here. So we're seeing Fibonacci completions at 100% and 200%. So that's what's holding us back. NVIDIA had a big pullback, and it was saved by the 8 EMA and the top of the gap. It bounced off at the top of the gap and it stayed above that. Probably still a good stock to own. You know, this kind of expensive stock, I would buy a call, sell a call in pairs like that. Whirlpool had a good day, up 4.89%. Where did it have its top today? Look at that. Let's take this line here. Let's just move it down to the top today. And it again was the Chiku span hitting the cloud. So we've seen a number of stocks now where the Chiku span has been where the traders are sitting. So if you're looking for places to put stops for short-term gains, try placing them where the Chiku span is hitting something important, like the Senku span A, which is the top of the cloud, but since this is reversed, it's the bottom of the cloud. The next one will be the 200 and the top of the cloud. That's going to be an important level. Let's move that green line right up to there, and that's the one we're going to be looking at next. You're going to see Whirlpool getting rejected at 131.89, but first of all, it's got to get over the 200. I continue to hold Whirlpool with some 135 short calls. Netflix down 15. Again, this C pattern in this shark, I still don't believe it's going down to D, but it is having a tough time breaking that C harmonic. AT&T had a good day, and the Chiku span is in here, stopped underneath some candles. U.S. Bank, let's take a look at all of the banks. They were exceptional, 7%, 9% for Goldman Sachs, 8% for JP Morgan. The XLF was up 5.5%, 9.5% for the fifth largest bank, U.S. Bank, and 9.5% for Citibank. So that's a good sign when the banks are up. That's a really good sign for the economy. W, struggling. That's Wayfair. I think that's all we're going to look at. Let's just take a look at Shop. We haven't looked at that in a while. Look at that huge pullback. Anyways, today was a very good day for people holding on to stocks. Tomorrow, I would expect, we haven't looked at our oscillator data. The oscillator made a new high, higher than this one. That's very strong. But we are now getting into the overbought area around 200, but we still have room to move up. So the S&P still looks like it can go higher. The volume was higher than any other day last week, with the exception of Monday. And in the last 3 weeks, it's our third highest trading day for volume. But in terms of shares traded, there were less than 1 million declining shares that were traded, and the summation index continues to creep higher, which is our 3 to 6 month gauge out there. And with the election 5 or 6 months away, this is indicating that the market could be strong come the election. Now, does everyone on Main Street feel the wealth that Wall Street is feeling? That's what's going to be the talk of the election, not necessarily what the Dow Jones is saying. So look for more upward movement this week, failing any bad news around oil, coronavirus, or vaccines, or China is coming into play again because Trump now wants to tear up the China Phase 1 deal. And that's going to hurt everybody. That's going to hurt retailers big time, and it's going to hurt the farmers.